Ever heard of a moving average in technical analysis? It's like your guide in the market, showing trends and acting as a support or resistance. But guess what? I stumbled upon this amazing free indicator on TradingView that's 10 times more accurate than a regular moving average. Seriously, it's a game changer. In this super easy tutorial, I'm going to show you how to use this fantastic indicator and even share a complete trading strategy that will help you consistently profit. And here's the best part. It works for trading cryptocurrencies, stocks, futures, and Forex pairs. Plus, I've got some optimal time frames for you. 5 minutes, 15 minutes, 1 hour, and 4 hours. But before diving into nitty-gritty of this trading strategy, please just smash that like button, because by doing that, the YouTube algorithm is going to show this video to more people and traders like you who are keen to know all about this unknown world of trading, especially about technical analysis. Now, if you're tired of those losing streaks and wish you had a pro guiding you, we've got the solution. I've got some exciting news for you. Bybit, the crypto exchange everyone's talking about. Imagine earning up to 30,000 USD in deposit rewards, enjoying zero maker fees for the first 30 days, and trading with the lowest spreads and fees in the market. Yes, it's all possible. And guess what? Bybit is among the top 3 global crypto exchanges. So why wait? Click the link below and dive into the action. Trust me, every trader needs to be on Bybit. Don't miss out. Let's make those trades count together. Let's dive into installing this incredible indicator on your chart. Log into your TradingView account, open any market you're interested in. Right now, I'm looking at the Ethereum price chart on the 1 hour time frame. Go to the indicators, search for settlement range MA, created by Chart Prime. Thanks to him or her, by the way. And guess what? It's 100% free. Now, let me tell you what's so special about this indicator. It gives you a dynamic view of market activity, highlighting stable and choppy market areas. It's like having a clear map in a chaotic market. The best part? It filters out the noise, making it easier for you to spot market trends and minimize losses. The settlement range MA has 3 phases: bullish, bearish, and consolidation. When buyers dominate, the line turns green. When they start taking profits and the market consolidates, the line turns gray. And when sellers take control, the line turns red. You can even customize it according to your preferences. But wait, there's more. This indicator also offers multi-time frame price analysis, just like a 4-hour or daily chart. And voila! Now you can see the bigger picture, and you don't need to switch in between time frames. You have it all in one on your screen. To make our strategy even more powerful, let's add a couple more indicators. Open the indicators again, search for Parabolic SAR with algorithm and alerts by Lonesome Blue. This easy-to-read indicator gives buy and sell signals based on market volatility. And when combined with our magic moving average, it cancels out most fake signals. Remember, buy in an uptrend, sell in a downtrend, and avoid signals during your range market. Combining indicators with advanced price action techniques can really up your game. Exciting news! Dive into a world of trading wonders with FP markets. Imagine raw spreads from 0 pips, fee-free funding, and a colossal 500x leverage, all in the palm of your hand. With 18 years of expertise and being multi-regulated, your investments are safe. Follow expert traders effortlessly on platforms like MetaTrader 4 and 5. Oh, and here's the cherry on top. You can use my link down in the description and above here to win 100% sign-up bonus plus more. Don't miss out. Start your extraordinary trading journey now. Now for the nitty-gritty details on when to open trades. For long trades, make sure there's an uptrend. The price should be above the settlement range MA and the line should be green. Also, the moving average should be at least 2 time frames higher than your current time frame. And always buy near a demand zone, not at supply prices. Protect your investment by setting stop losses below the parabolic SAR dots and aim for at least double the risk as your target. For short trades, it's the opposite. Make sure the market is bearish, wait for a sell alert from parabolic SAR, and ensure the price is close to a supply level. Don't sell if the price is near a demand level. Again, set a stop loss above the parabolic SAR dots and target double the risk for your profits. I highly recommend when you want to try any new trading strategy, you must backtest it. Or if you don't like backtesting, you can just use demo trading, which is available on Bybit. Previously, I made a video about it. I don't want to make it so long, so you can check it out and learn how to do it. But here's the kicker. Previously, I made almost an hour of video completely about proper risk management, how to do your proper position sizing, risk to reward ratio, winning ratio, whatever you need, whether you're a beginner or a pro, but you're kind of confused in between what am I supposed to do, this is probably for you. So give it a try, watch it, you will come back to me and you will thank me without any doubt. Also, if you want to increase your profit factor on the other side of the coin, beside the risk management, I highly recommend to watch this video of the mixture of Fibonacci retracement levels with supply and demand, or let's say price action, and you're going to find it crazy good with any trading strategy. It doesn't matter what trading strategy you're using, what is your indicator, what are you doing. This combination works out on any time frame, any trading strategy, and it's crazy good. I tried it out like thousands of times and it works out perfect. I hope this strategy makes sense to you. If you have any cool ideas or indicators, drop them in the comments below. And hey, always remember to backtest/forward test any strategy you find. Happy trading and catch you in the next one.